Welcome to the 401k Audit CPA Success Show, where we're 100% focused on helping companies across the United States prepare for their 401k audit. If you have 100 eligible participants in your 401k plan, then this podcast is for you.
Welcome, everyone, to this month's 401k Audit Success Show podcast. I'm Kim Moore. I'm the director here on our 401k virtual audit team, and I have Karen Hill with us as well, the audit manager on the team. So welcome, Karen. It's
Hello.
that time again for us to
Yes.
discuss everything 401k audit related. And let me, before we dig into the topic, I always like to throw out my email address. It's the letter K, then Moore at Anders with an S, Anders, CPA.com. Again, Kmore at Anders with an S, CPA.com. If you have any questions about what we're talking about today, additional interest, you need a 401k plan audit, you'd like to talk about that, or you just have a potential topic for a podcast or just something that you'd like to talk about with regard to 401k plan audits, we're here to help, and we'd love to hear from our listeners. So feel free to reach out if that is appropriate for you. Today's topic, we are going to talk about something a little bit different. I titled this Lessons Learned from the Department of Labor Audit Quality Study, which is a big, long kind of title, but just a little bit of background before we get started. Of course, the Department of Labor is responsible for making sure that those who have benefit plans, and this could be beyond just 401k plan audits, but any kind of benefit plan that's subject to regulations imposed by that department. And also there is something called ERISA, which was a congressional piece of legislation passed back in the 70s to protect benefit plan assets and contributions, et cetera, that was passed by Congress. So the Department of Labor is charged with making sure plans are adhering to those particular rules, as well as any other rule that Congress might pass with regard to benefit plans. There's a group, it's called EBSA. So it's the Employee Benefits Security Administration. It's a big long title, but we always abbreviate it EBSA, EBSA. That's a part of the DOL. And they are the ones that are responsible for doing all of this regulation and checking and just making sure everything's going the way that it is. Another group inside of EBSA, called the Office of the Chief Accountant, they do routine, regular reviews of benefit plan audits. We're going to talk about that here in a little bit, but every year they'll pull just randomly audits that were completed, and they'll take a look at them, and they'll give feedback back to the plan and then also to the auditor that conducted the audit. And it may be that everything was fine and there's nothing to do, or there may be some kind of informational, here's some things that we think we should be aware of, or hey, you kind of missed these areas, or you didn't fully address them, or you missed an issue, or it could be a variety of things. So they do it on a regular basis, but they also do what they call an audit quality study on a less frequent basis. They tend to do them about, I like to say, every 10 years, not exact, but they'll pull a set of audits. We're going to talk a little bit more about this in detail as we get along. And then they summarize all of the audit results from all of those reviews, and they put out what they call an audit quality study. And they just recently completed one. It was issued back in December of 2023. So it just recently came out within the last month or so. And we wanted to give everybody an update on that and the kind of what the study said, what they found, and what are the takeaways from that study. And so I think there's kind of two ways to look at this. If you're a plan administrator, this impacts you because you may need an audit. You may already have an audit with an auditor, but it also impacts you in general because the kinds of things that they were finding are things that you as a plan administrator need to be doing in your audit even if you don't need an audit. So that's kind of one take of this. It also is important to you if you are an auditor, or maybe you're thinking you're an auditor and you don't do benefit plan audits right now and you're thinking of doing them. This would be very relevant to you as well, because it talks about all the things that you need to be doing and what folks are not doing, that they should be that they should be doing. Um, so that's a little bit of background about what we're going to be talking about today. The study is available online. So if you want more detailed information, or you want to kind of check it out yourself, just Google Department of Labor Audit Quality Study, and do the most current year. Like I said, they've done them about every 10 years. So if you just do audit quality study, you might get one of the previous ones. So make sure you're Googling 2022, 2023, something like that, and you'll get the most current study. So Karen, let's dig in a little bit so we give the people background about the plan audits that were looked at as a part of the study. And just for reference for everyone, there's no specifics in the audit quality center or the quality study. It's not going to talk about ABC plan audit. It doesn't get that detailed. It's more generic. But what kinds of information did they provide in the study?
Well, first of all, they reviewed a little bit over 300 audits, and they divided those into two categories. One was simple, which consisted of 401k plans and 403b plans, and then the complex audits, which are the ESOPs, the defined benefit plans, and any health and welfare plans that were audited. One of the things that they broke down was for the demographics on the audit industry, the people who are actually conducting these audits. In 2011, there were over 5,000 firms. It was 5,203 firms that were conducted audits on 5 or fewer plans. So they didn't do very many. As of 2020, that number had dropped to 2,589. So about half.
Mm-hmm.
And they also found those were the firms. And then the audits completed by the firms that completed 5 or less audits also dropped.
Yeah,
about half. It was a little less than half, but they also did.
Yeah.
So what that shows is that the industry is starting to go towards firms that specialize in employee benefit plan audits, which is a good thing when we get a little bit further along into some of the things that they found. So the firms that completed 100 or more audits went from 81 in 2011 to 133 in 2020. So that shows that the more so than what happened was, it wasn't these firms that were doing 5 or fewer audits started doing more. They stopped doing them. And there was firms that were in between that decided to specialize more.
Mm-hmm.
So they increased.
Absolutely, yeah. And I can tell you from our work that we do with our blogs, because we also have blogs that go out on a regular basis, and just looking at how we show up, if you Google 401k plan auditor, there are more firms now that definitely are specializing in this. And if you just Google that and just go look, you'll see that that shows up, and people will talk about that this is what we do. We don't do other kinds of audits, and we like this kind of audit. We hire people that this is what their expertise is in, etc. So you can definitely see it in other aspects of the industry. So this doesn't surprise me. This is a trend too that's been going on for a while. So one kind of takeaway on this, if you're a smaller company and you have an audit firm or a CPA firm that you're using maybe to help you with your financial, they maybe do some year-end entries for you, or maybe they do a compilation review of your financial statements. Maybe you use them to help with your tax planning, or maybe to even do tax returns for the entity or for the owners of the entity. That's very common that smaller companies will use a CPA firm for kind of bookkeeping, tax, and potentially even the lower level services of an audit. So the compilation, the review type things. And then you may get big enough that all of a sudden you need a 401k plan audit. Used to, that was, you just called up your CPA and you said, hey, by the way, I just went over the 100 limit and now I need an audit. Can you do it? And those people would say, oh, sure, I'll take that on. I've never done one, but I'll do a little research and I'll do that for you. Now that's going to be a lot more difficult because most people, there's been a lot of education around how complex this area is, the uniqueness of it. It's not like, if you took an audit class in college and you feel like, okay, well, I could probably do that. Probably not, because this is very
No.
unique and different. So the
Yeah.
kind of the word's
Things are
gotten out.
just
Yeah.
things are just treated differently than they are in a financial statement audit. There's just ways that you treat certain things differently in these audits, and
Right.
it's not. I,
It's
I
not
won't say it's not easily transferable, but it's not really.
right. And there are unique things that you need to understand that you
Right.
wouldn't know about if you didn't get training specifically on these. So I think that that word's kind of gotten out, and a lot of the smaller firms that are doing the work that I described don't want to take on these types of audits, and you
Hmm.
see it in the numbers too. So just I mentioned that because you may be a listener and think, well, this probably doesn't apply to me because I'm small, but the hope is that everybody's going to get a little bit bigger and a little bit bigger, and eventually you'll probably be to the point where you need a 401k plan audit, and don't just assume that, oh, well, we have a CPA, they'll just take care of that, because they probably won't. And especially that's, I think, going to continue. I think that consolidation is going to continue. Um, so, and we're going to talk a little bit more about what this means from an audit firm perspective here a little bit later. But one of the things that they highlighted in the study, that things that the Department of Labor, that EPSA that I talked about, that portion of the DOL, things that they have done since the last audit quality study, they actually sent letters to any plan administrator. So if you're running a 401k plan and you needed an audit, and you had the audit conducted by a firm that only did 5 or less benefit plan audits. Doesn't mean they didn't do other audits, doesn't mean that they weren't qualified. Nothing about that. This is just by the numbers. If you had an audit conducted for you of a benefit plan by a firm that did 5 or fewer total benefit plan audits in the time period that they were looking at, the DOL sent a letter to you as a plan administrator, just letting you know that this quality study, has continually noted that those firms don't do as good of a job on the audit. Doesn't mean your firm wasn't very good at, it wasn't specific like that, but it was just pointing that out. I thought that was interesting. And that's probably forcing a lot of companies to take a second look at the auditor that they're using. They also, we mentioned, they do regular audits of audits outside of the quality study, and excuse me, they randomly pick them usually. Sometimes they will pick them for other reasons, which we won't get into the details of that. But they're going to give feedback back to the plan and to the auditor, and they may require you as the auditor or the plan administrator to do certain things to correct those deficiencies that they found. Those are they can be pretty detailed. Depends on kind of which bucket you fall into, but some of those reviews can be pretty complicated and pretty in-depth. So they're going to ask for copies of all the work papers from the auditor. The auditor has to provide those in a very short period of time. You don't get months. It's actually about a week to turn those over to DOL. And then they have an auditor there at the DOL will review them. They're comparing them to all of the requirements for an audit. And there's various things that you need to do in these audits. It isn't just the audit standards, which apply to all audits, but they're gonna check that. They're gonna check the financial statements themselves and make sure they adhere to the accounting rules that are out there. But there are also these unique things that are unique to benefit plan audits, and make sure that you're covering all of those. And so any deficiency in any of those areas will get pointed out, and that will then need to be rectified in some way. And the feedback, the letter that they give, their certified letters, will describe any action needed and the time frame and that kind of thing. It could be, if the audit is very poor, it could mean that the audit firm can't do anything. the plan administrator is going to have to go get another firm and have the audit done all over again. That would be like your worst case scenario, but that does happen. So one of the things I always like to point out to folks that are watching on these podcasts, you hire an auditor, and I think most of them say, hey, I hired the auditor, they're the expert, I'm done, I don't need to worry about anything anymore. That's not the case, because the DOL can come after you as the plan administrator if you don't get an audit, of course, but they can also come after you if the audit is deemed to be insufficient. So if everything wasn't covered appropriately, or the auditor maybe didn't do steps that they should have. So it's very important that you make sure you're hiring a qualified auditor, and we kind of alluded to that already from the statistics out of the study. The DOL will also do an inspection of the firms that are doing the most audits. So they pick the 50 firms that have the most audits, that they've conducted for the year, and they will actually do an inspection of those particular firms, and those are kind of their most in-depth. One of the reasons being that those firms are auditing the largest dollar volume of assets, plan assets. So, and a lot of times those firms are doing the more complex audits as well. So that's another reason. And then ultimately, as I mentioned, if those audits that they're reviewing are deemed to be grossly negligent, again, not just they find a few things, but they're grossly negligent, they will refer that negligence to the Board of Accountancy of the state where the audit was conducted. So if I'm doing an audit for a company plan that's in Missouri, for example, they would then refer that deficiency to the State Board of Accountancy for Missouri, and then that would be on that board to investigate and take whatever action they deem necessary. The reason for that is that audit firms, CPA firms, are licensed in states. That allows them to do business in that particular state. So they're passing that deficient work on to the body that regulates the auditor that did the deficient work. So that's the reason for that. So that's kind of how they're addressing it with the audit side of it. They can address it with the plan sponsor, the company that's sponsoring the plan. They really can't take action against the audit firm, but they can refer it to the state then who can take the action. So those are all things that are ongoing from the Department of Labor, just so you know. Again, if you're an audit firm and you're thinking of getting into this particular specialization, something that you need to to understand that you are subject to those reviews and potential findings from the Department of Labor, which could then potentially jeopardize your CPA license as an individual and or as a firm. So very, very important. I'm going to get into a little bit more depth here on the actual findings from the quality study. They kind of obviously reviewed all of those audits that Karen talked about, and they grouped findings into 4 different categories. So acceptable, that would mean they basically didn't find anything, or they're really nothing of any consequence. And then acceptable minor. So that would mean overall it was acceptable, but they did have some findings. They were not significant, really. They were, but still important enough to make note of. And then 2 levels of unacceptable. So unacceptable, but then they had some other minor areas, and then just totally unacceptable. So the audit firm kind of missed the boat. And unfortunately, there were some that fell into that bucket. So just as a comparison, the current year quality study had 30% of the overall audits that they reviewed had deficiencies. In the one before that, the survey before that in 2015, 39% had deficiencies. So the way they talk about it in the quality study, it got better. It went from 39 to 30. That's good. Fewer deficiencies is good. But a third of the audits that they reviewed had deficiencies worth noting. So that's a third of the work had deficient portions of the work, or maybe more significant portions that were deficient. So they weren't weren't all that happy with the results. Like I said, glad it got better, but from their
Now,
perspective, 30% is not really
does this
acceptable.
include anything from acceptable minor up
I believe
to
so. Yeah, they didn't.
so
Yeah,
so
they
they
didn't.
okay.
Yeah, they didn't really go into all the the details of how that they got to that number, but I believe so.
Okay.
So that the flip side of that is 70% of them had no issues. So I mean,
Yeah.
you can, is it glass half full or glass half
Hmm.
empty, I guess, kind of thing. But I know I was on a call in December that it was an AICPA training webcast about EBP audits, and they had the Office of the Chief Accountant come and discuss the quality study. I mean, it literally had just come out, and he was really stressing. He wasn't stressing the 70% or that it went from 39 to 30. He was stressing that it's still at 30%. So they they were not
Yeah.
happy. That-
It does make you wonder though if there is a lower percentage of the unacceptable. I mean, it
right,
makes you wonder, especially
right.
when you get into the breakout between the small firms and the large firms.
Yeah. I mean, I think you could really, and I would encourage folks to do this, pull up that survey. There's all kinds of charts and they slice and dice all the data in there. So, and towards the back of the survey, they give, and we're going to get into some of the findings that they had, but it slices and dices the findings a lot more as well. So if if this is an area that kind of piques your interest, I'd encourage you to pull up the quality survey. It's long. I mean, the actual result is a fairly long document, but it's not in legalese or anything. It's very easy to read, very easy to digest. So it's not something that, oh, I got to spend a whole day trying to figure out what they said. It's fairly easy to read and understand. So I'd encourage everybody to kind of pull that out. The other thing that they mentioned is that they broke out this deficiency rate by the firms doing a smaller number of audits or a larger number of audits. Those that only performed 1 to 2 plan audits, so they're doing very few. Maybe they only do one a year. They had a 70% error rate. Those that are doing 100 or more audits a year had a 17% error rate. And the other thing I would say on those 100 plus audits, that's where you're starting to get into some of the more complex audits as well.
Right.
So I think the actual error rate, if you really kind of broke out the kind of simpler audits, those numbers would look even worse, I think. So it really does go to show you that this is a more, I don't, complex is kind of, how do you find complex? But I think it is a specialized area. And so
Yes.
it's the one thing I think they really want to encourage people, don't be a dabbler, is the
Mm.
terminology that the DOL likes to use. That I don't really understand this, but one of my clients needs one, so I'll just go ahead and do it for them. It's probably the wrong approach to take. If you're going to do that, you really need to go get some specialized training in this particular area. Don't just assume, oh, I did audits, back. I worked for a big firm, 15 years ago. I'm sure it has changed that much, and so I can probably figure it out. That's the wrong approach. You really need to be careful here, and if you're going to get into this, make sure you know what you're doing. And one other thing I wanted to point out before we get into some of the specifics of what they found in the study, they also look at 2 other kind of data points related to the firms that have had deficiencies. One is firms are required, if they do audits, in every state, the law is the same, that every 3 years you have to have what's called a peer review. So that's another audit firm comes in and takes a look at the work that you do. And again, they're going to pull a sample. So they're not going to look at every EBP audit that you do. They're going to pull a sample of 1 or 2 or 3, just depending on how many you do. And then they're going to pull samples of the other work that you do. And they're going to take a look at that. And there are peer review checklists that they have to go down. And they have to address every one of the items on that checklist. Did you do these things? Which goes to the audit standards, the financial reporting standards. It goes to these regulatory issues. Did you address everything you're supposed to? If you don't, then that result of that peer review can come back again as an unacceptable. There's various levels. We won't get into all the details on peer review. But the whole point of the peer review is to point out to the public, is this firm doing the things that it's supposed to do? And if you get an acceptable peer review rating, that means that you are. They went and they looked, an independent group came in and they reviewed and they said, yeah, you're doing the things you're supposed to. Unfortunately, though, as the Department of Labor did this study, a lot of those firms that had deficiencies per the quality study were receiving pass ratings on their peer review. So bottom line, and that's been, again, fairly consistent. They've seen this in prior quality studies, that those peer review findings are not always indicative of at least the DOL's assessment of that firm. So be a little cautious. I think it's always a good idea, if you're evaluating audit firms, to ask when was their last peer review and what, can I get a copy of the letter, because they're public. And make sure that they did receive a pass rating, but always kind of take it with a grain of salt, because per what the DOL found, that's not always indicative of the actual level of quality on these benefit plan audits. The good thing is they were finding in previous studies that firms weren't even getting peer reviews, which is a violation, ethical violation, and that's actually gotten better. So that's a good thing. There's also another breakdown in there about firms that belong to the AICPA's Audit Quality Center. So there's an Employee Benefit Plan Audit Quality Center. It's a voluntary organization to belong to. And firms that do a lot of these benefit plans do tend to belong. There are additional training that's offered to firms that belong to that quality center. There's additional tools available. And there are additional requirements. So the folks that are in charge of those benefit plans for those firms have to do some additional continuing education, and you have to meet certain requirements to belong. They did find that the firms that belong to that voluntary association tend to have better results on the quality center studies. So that just tells you that it's probably those people care about those audits, and that's why they belong to the voluntary association, and so they're paying more attention. But again, good thing for you to ask if you're considering changing auditors, or you need an audit and you're looking for audit firms. So definitely something to kind of factor in. So let's dig into a little bit, Karen, the areas in the study that they found the most deficiencies.
Well, first off, participant data testing was one of the areas, and I know that for our firm, that is the biggest chunk, really, of when you go through the different areas of testing. That is the biggest chunk. That is the most complex, and there's lots of different ways that you can do it. And it's not saying that one way is better than the other, but that's one of the areas where they found a lot of errors, and I could see why, because it is, like I said, one of the more complex areas.
And it's
to
unique.
review.
It's
Yes.
unique. You would not do that. You would only do participant data testing in a benefit plan audit. So
Correct.
if you maybe have done financial statement audits for 20 years, you wouldn't necessarily know that you have to do this. And that actually was the highest failure area of all of the areas. This one had the most deficiencies.
And another area was contribution testing. And do you know, is this around timeliness? Because I can see
primarily, yeah, contribution timeliness was a big part. It wasn't exclusive to that, but because they also talked about receivables and making sure that the total amount of contributions, both on the employee and employer side, that you're testing that to make sure that all of the contributions are getting from the employer into the plan, and appropriately segregated too.
Okay, and I can see, especially for firms that don't do a lot of these, because errors are treated differently in an employee benefit plan than they are in a regular audit. You have a concept of materiality in a financial statement audit, where if there is a difference of a few $1,000s, you might say, oh, well, that's no big deal, I pass on that. An employee benefit plan, especially when you're dealing with contributions, that's not the case. You don't have because the DOL views, I mean, that's employee money, participant money, and you want to make sure that they aren't making errors or doing something with the participants' money. So I could see that there where that could be an area where they could find a lot of errors with that.
Mm-hmm.
Um, Benefit payment testing was another. I'm assuming that probably had something to do with some of it was probably around vesting because I've seen errors with vesting
Mm-hmm. And hardships. A lot of
and
it was around
hardships. Was
hardships.
hardships, yes.
Mm-hmm. Mm-hmm. And
Yeah,
and I
so
think inappropriate approvals, because sometimes you need a spousal approval under certain
oh
circumstances.
yeah.
It depends. I mean, that's not always true, but
No, I think that's less true now than it used to be.
mhm. But yeah, it
I
depends on
know.
the plan and the provisions and what type of
Yes.
distribution it is, and then
I
there's
know.
oh, I'm sorry. There's all kinds of weird rules too around if
Right.
there's a divorce or separation or
Right.
uh, uh, a death of a participant, and then you've got
Mhm.
beneficiary rules, and so I think it got into all
Right.
those things.
Oh, okay. I was going to say I do recall that 20 years ago the spousal approval seemed to be much more prevalent than it is now.
Hmm.
Internal controls, and I again I yeah I now I know with us and most of the firms that I've worked for, we've always done work around internal controls. We don't usually test controls, but you still have to do walkthroughs and you still have to obtain an understanding of the
Hmm.
controls. And you know, you can't just say, well, we're not going to test controls, so you don't do anything with them. And some firms that aren't as familiar might skip that step.
Another thing I was going to mention on the internal control side, and they did specifically bring this up in the report, is around SOC reports,
Oh,
which is
yes.
SOC is the abbreviation there. And so with these plans, in most cases, especially on the 401k side, a lot of the administration is done by a service provider.
Mhm.
And so the actual what would be your client as the auditor, the company that's sponsoring the 401k plan, they don't do a lot of administration. It's kind of outsourced in a way to service providers. But as you know, that doesn't negate the work that the auditor needs to do. So
Right.
that participant data testing still needs to happen. The benefit plan testing needs to happen. And really, you need to get what's called a SOC report, um,
Mhm.
which is conducted by another audit firm, and then it will outline the testing that audit firm did at the service provider. That'll give you a good understanding of what controls are at the
Mhm.
service provider and are they working, because they'll actually test those controls. And so I think
Correct.
that's an area that historically they've seen that either the firms don't understand, that they don't get the SOC reports, or maybe they just get the SOC report, throw it in the file, they don't really read it. So
And you have
that's
to do
another
something
area.
with those complementary user controls, user
Right.
entity controls too. You have to do something surrounding those. So even if you do get the SOC report and you do read through it, if you don't do something around those complementary user entity controls, then
Right.
that could be
And
that's an
that
issue
goes
as
to
well.
the internal control component.
Yes.
Yeah, that's part of that
Yes.
as well.
Yes. And finally, planning and supervision, which includes risk assessment.
Right.
And that is a big emphasis. I mean, there's a new SAS out for all
Right.
audits this year that's effective this year that um,
Right.
that
For
deals with
risk
this.
assessment. Yeah. And I expect that area will not go away. It's probably going to get worse in
No,
in the next
no,
quality study
no.
that they do.
Yeah, they want you to do more in your planning and risk assessment, and maybe actually less in the testing
Hmm.
if need be.
Right. Which is going to be
So
interesting. We're all
yes,
we're all kind of struggling with that and trying to figure that out right now. But
yeah,
definitely an area you want to make sure that you're addressing in your benefit plan audit, and that you're documenting too, because you might be
yes,
doing it, but if you're not documenting it from the DOL perspective, it didn't happen. So
correct.
so definitely things to consider there. Again, there's more details in the quality study. We don't have time to go in depth into each one of these areas, but if you look at some of our previous podcasts, we do talk about more in detail about some of those areas. And so if what do they mean by contribution timeline? If you go look at, listen to some of those previous podcasts, you'll be able to pick up the more detail there. I think the thing that it kind of stood out to me, the majority of those areas that were the highest areas of failure are the uniquer elements with respect to benefit plan audits. So that tells me that probably the people that are doing those fewer number of benefit plan audits are probably doing the general audit stuff fairly well. It's the uniquer nature elements that they're struggling with. The other thing, and they didn't go into a whole lot of detail on this, but there are what are called full scope audits versus limited scope, or the 103A3C, which is a limited scope audit, or the non-103A3C is the actual correct terminology on those. So the ones where you're actually doing some investment work, they did find a lot of errors there, which is not a surprise because the vast majority of 401k audits anymore are the kind of limited scope 103A3C, where you don't do a lot of investment work. But in those where you did have to do work, they were finding a lot of errors on people not doing year-end evaluations of the pricing of the investments. They weren't looking at the transactions that occurred during the year and the pricing of those. They weren't getting confirmations or some kind of verification of the holding of the assets. And they also, quite often, once you start getting into the more complex areas, some of the areas like defined benefit plans, things like that, you're using a specialist, and there are special rules around using a specialist. And they had a lot of findings related to that, which there are new rules coming around that as well. So another area to, depending on if you're getting into this, where area you're getting into, another thing to kind of consider. There were also some findings, and again, I'm not going to spend a lot of time on this because we've talked about it in prior podcasts, but if something happened to the plan, so it merged into another plan, the plan terminated, there was a big transfer of assets in or transfer of assets out. The plan itself changed, so the document changed and the provisions changed in the middle of the year. They had a lot of findings related to those types of things. I think the auditors that aren't that familiar with how benefit plans work would just kind of look at the end of the year and, okay, everything looks good. Well, they're ignoring what happened during the year. And there can be a lot of errors in those areas. So it's kind of an important area to consider. So takeaways here, we've talked for half an hour here about all of the findings from the quality study, but let's kind of sum it up, Karen. So if I am a plan sponsor and I found out I need an audit firm, and oh my word, now you just are telling me that a whole bunch of audit firms don't know what they're doing. What should I do? What should I do with this information?
Well, when you're searching for an auditor, you need to ask them, how many audits do you conduct annually? And specify employee benefit plan audits, 401k audits. You want to make sure that they're doing more than just a couple of them and they understand what they're doing. You also want to know how long the benefit team has been conducting these audits. So what's the experience level? And understand that the person who is coming out to conduct your audit may not have as much experience, but the supervisors, the managers, the partners should be experienced in those areas. So
Right.
don't panic if the person that's coming out maybe only has 1 or 2 years of experience, but as long as the people who are supervising them, because they know what to look for, and they will ask during the review of the work papers, they will ask the questions to make sure that they're addressed. Does the firm have established process for conducting the audits? Have they had a DOL inspection or review of their work papers? I know we have. that that happened a couple of years ago. Do they belong? That's another thing, is since the firms that belong to the AICPA Quality Center, they have a lower instance of errors. Do they belong to that? Do they use any of the tools? And what training does the staff use every year? As far as like our remote 401k staff goes to the EBP annual conference every year.
Right. Right.
Do they have regular training? I mean, the requirements are really kind of minimal, but if they go above and beyond, that's an indication that they take these audits seriously.
Right. And I think it's important. I mean, training, people come like, oh, training, yeah, they're CPA, of course they do it. But the training is important because not only are these specific areas that are different from your general audit training that you might do, but they change all the time. There's
Yes,
new audit standards, there's new regulatory requirements. Congress is always passing rules that impact the plans, and you got to make sure those get factored in. So that training is a bigger deal than what you might
yes,
think. And so you might have done these audits, even 5 years ago, and you knew everything about them. Well, that training
it's
isn't
changed.
any good anymore. Yeah, because so much has
The
changed. So
reports are totally different now.
that's exactly right. Yeah. So you could get an auditor, and you'd be like, well, look, they had all that experience, but really they could end up with a
Yeah,
product that's
yeah,
not
that
very good.
yeah, that audit opinion that they once were able to recite, that's not the same opinion anymore.
Right. It's completely different. That would be a huge fail by your
Yes.
auditor if they were to use the old opinions. The other thing I want to point out, if you're an audit firm and you're considering getting into this business, you've maybe did them in the past and you thought, hey, this would be an area of growth for me or my firm. Again, we kind of talked about that along the way, but you want to make sure that you really understand the benefit plan audit requirements. You know what do I need to do? So make sure you get a hold of that peer review checklist would be a good thing to look at. Make sure you understand every single thing on there. And if you don't, you need to get some more training. I'd also encourage you to go to the that AICPA benefit plan conference that Karen talked about. That's a really good bit of training, and there's
Mhm,
different tracks you can do. So if you feel like you've got a little bit more experience, you can go to some of the more advanced ones. There are specific sessions on the different regulatory components, so
mhm,
that can provide you really good training. So that and the ISCPA has other online courses that they offer throughout the year. They have recorded sessions that you can listen to. Your state societies also have a lot of really good EBP training, and don't just focus
mhm,
on the state where you are. Look at some of the other states around you, because I know some of the states that maybe are not where you live, but they'll have good training opportunities, and you can certainly, you don't have to belong to the society to do the training. So another thing
mhm,
I would encourage you to focus on. We talked about the Benefit Quality Center. I definitely check that out, as Karen mentioned, if you're an auditor. And then I would do a deep dive on that quality study if you're thinking of getting into this, because it'll really maybe open your eyes a little bit to the risks of being in this space and doing the work. I mean, when you talk about it, it's a little bit more complicated. I mean, most of the 401k audit work isn't complicated, but it is unique. And if you don't spend any time training or getting familiar with these areas and what's required in the audit, and just in general how the plans themselves work, you can really get yourself into something that you don't understand, and it can be could come to a bad conclusion. So kind of with that, Karen, any other thoughts that you have before we wrap up here?
just that it is highly specialized. I've been doing 401k plans for a very long time, and the different firms I've been at, they've had different levels of, I'm not sure the word I'm looking for, but focus, I guess.
Hmm.
In big four firms, they want to do a good job with them, but they are viewed as more of a necessary evil that, okay,
Hmm.
we're doing these. But they do enough of them that they're going to keep up with it. Sometimes the smaller firms, they're like, oh, this isn't
You
a big
can wing
deal.
it. You can wing
Yeah,
it, and you'll be
it's
fine.
yes,
And that's wrong. That's a wrong attitude.
yes,
And I guess if
yes.
if if you're a newer person in the industry listening to this, and you're like, oh my gosh, that's kind of the attitude my firm has, you might want to have a conversation with them, because it's not the right way to approach it. And it's definitely not worth. If a lot of smaller firms look at it as one more fee and it's one more opportunity,
Hmm.
but it's not worth the risk, really, in my opinion,
No,
for the one fee or maybe two fees. I mean, if you're trying to build a practice, that's different. But just if you're not going to specialize in this, probably not something
right.
that you want to be
And
doing.
we have obtained quite a few audits the last few years,
Mhm.
specifically because the plan sponsor's former auditor decided that they didn't want to do them anymore. So
Right.
they're getting out of
They
the
are
business because they
those
didn't want.
the 1-2,
Yes.
or they're a firm. We've had a bigger firm that just doesn't want to. They want to put their effort into other
Hmm.
services they can provide to the client. They don't want to. They just don't want to specialize in this anymore, and they've realized it's taken up a lot of capital out of the firm, and they feel like that could be better utilized in other areas. So I think it is definitely an area that's consolidation is going to continue. So I think you're
Hmm.
just going to see more and more of that, and more specialization. So with that, we want to thank you for joining us today for the podcast. I hope you found it interesting. And like I said, feel free to Google that Quality Center report if you want a little bit more information. If you have any questions, you want to talk about your 401k plan, or you need a 401k plan audit again, my email is the letter K, then MOORE at anderscpa.com. So feel free to give us a shout if you have any questions. Thank you for listening, and we'll catch you in our next podcast.
Enjoy this podcast? Visit our website at anderscpa.com/401k to get more tips and strategies for achieving 401k audit success. We're here to be a resource with ever-changing rules and regulations.